Good morning, good evening, wherever you may be. I am the Crypto Crow, and I'm going to be doing something that I'm sure a lot of people thought I would never do. I've completely sold out. I've sold my soul. I am owned by everyone else now. No, that's not the case, but I am going to be doing a tutorial on leverage trading. Now, the first part of this video is pretty simple, and it's basically why am I doing this? So here's the thing. For the longest time now, I've had some strong misconceptions about leverage trading. I've been very adamant and very vocal about those misconceptions. Didn't realize they were misconceptions at the time, but because of all of the FUD and so many people on YouTube and primarily YouTube talking about all these leverage trading platforms like they were hell spawn over. And they're first of all, I do want to say though that this video is not intended for USA based traders. It's just not, because I don't know of any leverage trading platform that really I don't know if enables is the right word, US based traders to participate. So yeah, I mean, if you're in the US, you don't even need to watch this video because this really isn't for you. Everyone else in the world, I mean, less than half of my viewers on YouTube are in the US. Over half are from all over the world. So this video is for you. You know, I stayed away from leverage trading for the longest time, even though I was seeing so many different YouTubers, so many different traders utilizing it. And a lot of it just didn't make sense to me. You know, the idea was, all these YouTubers that are out there promoting different leverage trading platforms are basically just leading sheep to the slaughter. We're leading noobs to these leverage trading platforms so that they could go into these high leverage trades and lose all their money. And, you know, the idea was, I even thought that YouTubers were sending people to leverage trading platforms and basically profiting off of their losses. Like, that's what I thought. It's a green eggs and a ham situation. I simply did not understand. First of all, leverage trading has been a tool that's been around in traditional stocks, Forex, and everything else for the longest time. This isn't something that's new to crypto, but it is something that's been more widely known by the big boys, the big players with the big money and the big connections, and quite frankly, the experience and the know-how. This isn't something for newbies. This isn't something for somebody who's desperate to get rich off $100 to go throw caution to the wind at crazy high leverage, thinking that you're going to get 100 times return on your money. You're going to lose it. It's all there is to it. If you're a newcomer to leverage trading, I expect you, I implore you to either stay away altogether and practice trading using other tools and practice spot trading on 5-minute charts. I just don't think leverage trading is for you. But for somebody who is more educated in the crypto space or more educated or experienced in trading, I don't think there's anything wrong with leverage trading. I personally have been having a blast with it. One thing I will tell you is I'm never going to show you my trades. I'm never going to tell you, Bitcoin's about to go up, join my link and set up an account. I'm never going to do any of that stuff because, quite frankly, even though I believe now, after using it and learning about it and truly understanding it, I don't believe it's something everybody out there should use. I just don't. I have wrote. I've spent days on this. It's one of the reasons why I haven't done a video in several days. It's because I've been writing this tutorial. This is a guide. It does have an affiliate link in there. I do profit from people using that link. But I've made a pretty extensive tutorial on two things. One, why I'm doing this. Two, how to utilize Market Cipher, or at least how I'm using it. And then, and I go into pretty big detail on a lot of stuff. As you can see, I'm still scrolling. This is really long. I basically tried to write the tutorial that I wish I had. I basically wrote a tutorial hoping to save people a lot of time. I really emphasize the use of small time candles, 1 minute to 15 minute charts, doing very short term scalping, and all of that. Basically, what I've personally been doing myself. I will say that in the few weeks now, or a couple weeks, I guess, that I've done a lot of spot trading in the past. I am still new to leverage trading. But I've found it to be less stressful, believe it or not, and more fun in a way too. But I have not. Well, okay. My typical trading amount, my typical capital per trade is about $100. That's it. There's a difference between a YouTuber promoting one of these platforms and a trader that's actively using them. Anybody can promote something and throw a referral link in a video. Okay. I care more about the people actually using the platforms. What has their experience been? What are, you know, I've had a lot of questions, and I've had a lot of those questions answered very well. And so, you know, the whole thing is, why am I doing this tutorial? It's a couple things. One, because I wanted to provide the information I wish I had when I first got into trading. That's a part of it. You know, and the other part of it is, you know, the referral system's great. I'm not going to lie. You know, people that are outside of the US and they decide, you know, hey, maybe I'm trading on this platform, but I want to support Crow, or I want to support the platform, or I just want a different, whatever the reason, I benefit financially from people using the link. So that's why the links are included in the tutorial. However, and the video. And I'm going to be doing a lot more active trading because of this. But I didn't get into this. I didn't get into leverage trading because I wanted to promote it. I really didn't. I got into it because I wanted to learn more about it, and I wanted to learn how it worked. And I wanted to learn, is it more beneficial to me or somebody like me than spot trading? And I wanted to better understand what all of the lingo, the catchphrases, the terms, and just a lot of the things that I just didn't understand when I'm watching a lot. And I explain a lot of this stuff in this tutorial guide. Things that I used to hear all the time that I didn't understand and what it meant to me. And so this video is, well, this is a long intro, but this video is really about trying to educate people in my way of how I'm handling leverage trading, in hopes that to some degree, it stops people from getting wrecked. Because there are a lot of newcomers that come into the space. They think leverage trading is a great opportunity to go, you know, bet everything on black, you know, like on a roulette table is the line that Wesley Snipes had, always bet on black, right? Because he was a badass in the movie and all that. And, you know, basically saying you can always count on me, right? It was a funny line, but it's true. People go to the casinos and they bet everything on one number, one color, one whatever, and then they hope for the best. And, you know, the problem is that when you go to leverage trading with that kind of mentality, the odds are stacked insanely against you. And it's not the platform that's to blame for that. It's the volatility of Bitcoin. It's market manipulation. It's whale moves. It's all of these things that are not controlled necessarily by the platform. Now, there are a lot of rumors and speculation that some of these leverage trading platforms have internal trading desks that trade against their users. So this tutorial is definitely not to try and drive newbies into the space to a leverage trading platform. It's really not. The focus of this is really, and I know this is long, and I may edit some of this, but I just want to make sure that it's very, very clear. If you are a newcomer to cryptocurrencies, if you are a newcomer to trading in general, just generally speaking, if you are new to any of this, just stop this video and go about your business, because there's nothing for you to see. I do not, what's the word I'm looking for? This is just no place for you. I mean, really, it's no place for you. For a newcomer to the space, this is a sandbox full of spikes. Like, it really is. You really have to know what you're doing. I don't even fully know 100% what I'm doing. I mean, I do in the basic fundamental aspect of trading, right? But in terms of, technical analysis, and here's the thing, it wouldn't matter if I were. That's how dangerous this space is. Even if I were a wizard at technical analysis in Bitcoin or cryptocurrencies, it would not matter. I would still lose trades. There's just no ifs, ands, or buts about it. Okay, so if that doesn't send you the message that A, this is dangerous, B, you need to be careful, C, do not trade with a greedy sensibility or a greedy mind, because that greed is going to cost you to lose everything. And there's more, but all I can say is be very, very cautious. Don't watch this video and then expect you're going to go get involved and make a ton of cash. That's not what this is about at all, because it's very much not likely to happen for you. But I would suggest, even if you watch through this video, click the link in the description to take you to this tutorial, because I go into a lot more detail about a lot of things than I'm going into in this video. Okay, they're kind of meant to supplement and support each other, and and then take it all as just a big word of caution, and hopefully a testament to how to trade as safely as I think I have been, if that makes sense. And on that note, we'll move on to the first lesson, and I will see you there. All right, ladies and gentlemen, now that we got out of the crazy stuff, we're going to actually get into some guidance, some tutorials, some how-to, try to make some sense of things. So keep in mind as well that everything that I show in this tutorial are things that I personally use, how I use them, and they're systems that I've created for myself, okay? What you're going to find out is over time, as you do, whether you're working on a daily, hourly, minute chart, whatever it is that you do, the idea is for you to use this guide to better acquaint yourself with trading, with the indicators, understanding what they do, and trying to establish kind of a flow with the market. Now, I know it's almost impossible to some degree when it comes to Bitcoin, because anything could happen at any second. I mean, the volatility is ridiculous. But the idea is, especially on smaller time frames, you can kind of start to feel the ebb and flow of the market. I have, honest to God, I did a week of steady trades. I mean, day and night, okay? I'm making scalp trades. And it got to the point where I could almost eyeball something and know what's coming next. And I know this sounds crazy to some, but it's really true. And I would make a trade and I'd make a quick scalp for $5 or $6. And I know it's not a lot of money. And that's the other thing to this is, this tutorial is not about teaching you how to make $1 million in a month. Okay, this is not about you getting rich quick off of crazy high leverage. I really do not use high leverage. Just don't do it. I'm probably going to say this a million times throughout the course of this video. Just don't do it. I really want you to read the article that I wrote, because I explain some of the psychology around what happens, such as if you're making a trade, you lose a little bit on the trade. So to try and get that back, you're going to go into a higher leverage because you're sure this sure thing, this sure signal, whatever, and you're going to make that profit back. And don't do that. Don't do that, because what happens is that kind of psychology is what ultimately causes people to lose everything. If you are trading effectively on small candles and you're scalping profits over time, you're going to win some and you're going to lose some, and you're going to cut your losses short on the ones that you get wrong, and you're going to let the ones that do well ride for a while. And then you're going to adjust your stop losses and things of that nature as you're moving forward in the trade. The gains that you make are going to be longer gains than you're going to have losses if you're doing things properly. Okay. So you don't feel like you have to increase leverage and do crazy things to get those profits back. You have to maintain your focus and maintain your momentum, knowing the idea is to win more trades that last longer than the losses that you cut short. And if you continue with that strategy, you should do much better over a period of time and accumulate profits over time than you should suffer any losses. Okay, that's based off of my own experience so far and why I've started doing these tutorials. Okay, so ultimately, when I'm looking for trades, I start looking at the weekly chart. I want to get a general understanding as to where the market is, where I see the market potentially going long term. Now, and I have not talked much about my own personal technical analysis for the longest time because I am not a TA guy. I'm getting there and I'm learning, but I've been doing technical analysis now for a couple of years, and I still don't trust technical analysis or my own technical analysis enough to do like these daily pump or dump type trade videos that we see all the time on YouTube. And quite frankly, I feel like a lot of other YouTubers, and I'm not saying who, but I feel like a lot of these guys just regurgitate ideas they see on TradingView, and it makes them appear to be like these power traders. It's not really the case. A lot of these guys, they're pretending to be real TA oriented. In reality, they're just kind of putting on a show. And I know how long it takes to get really guys like CoinBase. As much as I hate his everything but Bitcoin's a crap coin kind of mentality, the guy's legit. The guy has been trading for eons, and he knows what he's doing. And there are very few guys like him on YouTube. Let's just say that, okay? Now, I always start off and I look at the weekly chart. Now, and keep in mind, a lot of this is in preparation for what I plan to do for the afternoon or the evening or whatever time I've set aside to do my scalp trading. And that's really all I do when it comes to leverage or scalp trades. I never go long and let it sit and go off and live my life and come back and check up on it later. If I'm sitting at my desk, I'm scalp trading and I'm in and out, most likely, I think there may be 2 times where I've set a market stop loss on a trade because I had to go somewhere and I was pretty confident in the trade. And if I got stopped out, I got stopped out. And if I did get stopped out, chances are it was at profit anyway, because I'd watched the price action move to a position where once I set my stop loss, I was going to be at profit no matter what, but the idea was I wanted to let that trade go and see where it went, and they were still safe trades. And I think one of them I did get stopped out. I still got stopped at a profit. And then the other one, I can't remember, to be quite frank with you, what happened. But anyway, but I look at the weekly chart and I just kind of remind myself as to the general sentiment of the market right now. Are we bullish? Are we bearish? Because that, right now, looking at this, when we see the trend, when we see this kind of channel here, we see the 200 moving average acting as support for price activity. This was basically a support line at the 5,300 price, okay? And that's been continuing to slowly rise over time. And then we see this on a weekly chart. This was the high of Bitcoin. Okay, so you're talking 2017, and this is a weekly chart. So when we see this price activity, while we had a crazy dump and then a pretty high pump up to 14,000, which we wicked at 14,000, to me it felt a little superficial, but it happened, so I'm wicking that now, or I'm lining that out. But if we move further, we're seeing accumulation and a lot of volatility, okay, which is always going to be the case with Bitcoin regardless. But we've come down substantially. I mean, down to 38, 55, thereabouts, and we've continued to rise up from there. A lot of this has been based off of the speculation from the halving event that recently happened, the third halving cycle to take place in Bitcoin. So when I'm watching this price action, I'm seeing on the grand scale here, we've been down quite a bit. Now, if I go to the 4-hour chart, or I'm sorry, the daily chart. This is a more defined area of price activity based on what's happening on daily candles. This is a lot more crazy, okay? However, if I'm looking at this on an Elliott wave theory, we're seeing an ABCDE chart play out. And potentially we've already topped up on the D and we're starting to move down. And we can move down to wherever, okay? This E could be anywhere in here. This is just an idea right now, but it's to remind me that this is a likely scenario to play out. And then from the E, from the end of this wave trend, then we start to move up beyond, we could move up beyond $200,000 in Bitcoin. So, and if we look at history, we know that every halving series has concluded in the beginning of a new bull run, a new bull market. And we also see that once Bitcoin has risen up to its original all-time high, even just before that, we start to see Bitcoin's dominance start to lower while the altcoin market starts to rise up. Okay, it's this overflow of profitability from people that got into Bitcoin much cheaper, and now they're using some of their profit in Bitcoin to start dumping those into altcoins to start seeing 10, 20, 100x returns through speculative investing, okay, during this bull market, because we've seen that this is what happens pretty much every cycle now. So the overall sentiment long-term is bullish, but short-term, we're looking on a daily chart and we're seeing the price start to go down. So do we break down through this pattern here and get situated somewhere around where the wave should end? Okay. This is not destined to happen. This is what's just been likely to happen based off of the Elliott wave theory. Now, I'm not here to teach Elliott wave theory. I'm just basically showing the sentiment as what I think the price could do. So if this is the case, this is ultimately telling me that short trades, should this Elliott wave on a daily chart continue to play out as laid out, then short trades may likely be the safer bet when I'm scalping. However, at the same time, even though this daily chart price activity is telling me that, on the smaller the time frame, the less it kind of matters, because these time frames, you're talking 1 minute, 5 minutes, 15 minutes. Anything could happen in a candle like that. But it is telling me that overall, if I expect the price to go down, my average of profitability on short trades may likely outweigh the profitability of long trades at the current time. Hopefully that makes sense. Now, from there, I go into a 4-hour chart. And I'm seeing, as I get into smaller time frames, I start to utilize more and more of market Cipher. Okay. And, like right here, we got a red diamond. We got a red diamond saying, hey, price is going to go down. And it sure did. And then we got another one recently. Now this is on a 4-hour chart. We've got a pennant here, which is typically considered a bullish pennant, because typically when you see a pattern like this and price action rise, if the price action rise and we form this accumulation bullish pennant, typically the price is expected to break up out of it. But because of what's been going on with COVID, because of what's been happening with a lot of the speculators counting on the halving to start really sending the price up, we've seen, and I've done videos in the past on Bitcoin's halving, and typically we see a dump post halving and then a couple months of accumulation before we start seeing a rise up. In this case, and I think some of it has to do with COVID, the lockdown, people losing their minds, me included. I've been putting a lot of time in a lot of different things over this lockdown, including leverage trading, because I wanted to learn more about it and start really challenging myself and just give myself some sort of purpose in the midst of this lockdown. So on a 4-hour chart, we're still looking bearish. I mean, a short term, and the shorter the term, the more bearish things look until we start really reaching a point of a turnaround. So my sentiment moving, I mean, here we are. This is a 30-minute chart. Again, we got a short signal here on this. This is crypto long short. This is a free indicator. It's just something that I throw in just to give me some sort of like, where does this short trigger? Where did the long trigger? How accurate is this? This is just something that I've been looking at as something that may help people on scalp trades. Okay. So obviously we're seeing a lot of bearish activity on a short term on a 30-minute chart. Now, this is my 15-minute chart, and this is where Market Cipher really shines for me. This is where this is my main charting window for trying to figure out whether I'm going to go short or long on a trade. And I'm going to explain some simple things that, there are traders out there utilizing Market Cipher who just use a couple of simple indicators, and they do very, very well from this. Now, one rule of thumb is that you're basically expected to buy in the red over here. This is the money flow. You buy in the red, you sell in the green, right? That's the general idea for this indicator. What I've done here is I've created a 3-pane trading view window, which there's a link in the description. If you're going to use trading view, you will need a pro. I think it's a pro plus account, if I'm not mistaken, to get these multiple panes, and then the number of indicators and things that you're going to want. Now, what I've done is I've separated Market Cipher. As a matter of fact, I just reminded myself I need to update the written tutorial to include my settings for this. But I've separated Market Cipher into 2 different indicators, okay? So I've got waveform and VWAP over here, as well as the stochastic RSI. And then on the left, I've got money flow and just RSI. And that's because I don't want too much gobbledygook going on in one window. I want to see specifically what I want to see when I want to see it. So that's been beneficial to me. Now, some simple trading signals. Obviously, if you see a yellow X, that ultimately means there's manipulation going on in the market, and that something big is likely going to happen soon. And in this case, it did. We got a red diamond, or a blood diamond rather, and we saw the price action drop down to this support, which it has not broken through yet. Which if I were pricing or if I were trading this, I would likely have gone short somewhere around here. I would have rode this down to about here, and I would have set a stop loss somewhere above, and then I would have continued adjusting my stop loss as I watched the price fall, and I would have done that likely on a 5-minute chart. And if I didn't do it on a 5-minute chart, I would have watched it on a 1-minute chart. So as I'm watching the price action fall, I'm lowering my market stop loss on the platform. And once I get to a point where I'm comfortable, I might just let it ride. Once I would have seen it bounce off of this, I might have then closed my short position, and I might have went long to somewhere around here. Now, this is why trading on these really small time frames and scalping these profits can be a lot of fun, because it's basically all happening in real time. You're not setting a trade, forgetting it, going about your life, coming back to see what happened. I don't do that. That's not my thing. It's not fun for me. I would rather just accumulate and hold if I'm going to do that. The next indicator we're going to talk about is the VWAP, which is the volume weighted average price. Okay, there's so many acronyms and things, it's hard to get these things straight all the time, but that's this yellow waveform line that goes down the center of Market Cipher B. Now, basically what people utilize this kind of like, those of you who followed my videos in the past on bot trading, one of my biggest profit centers for strategies was the EMA cross, or the EMA, kind of an EMA cross. Yeah. I would run like a 13 and 34, and when one crossed over the other, blah, blah, blah. So in a sense, that's kind of what this is. When the price is coming down and it hits this line, this 0 line here, that's basically saying that the price is probably going to continue coming down. And I might sell at this point, okay? Because that's saying, if I've got a Bitcoin and the price is 9,500, 9,300, 9,200, well, once it reaches this line, that momentum is likely going to carry it further down. And in these instances, it typically does. And so then once it comes down here, once it starts to turn, I can either buy and sell the crossover at each time, and then, hope to profit, or I can see when it just starts to turn and then maybe start buying in there and wait for it to cross up and so forth. So That's one indicator. And some traders just trade that. Another one is the wave triggers. These waveform triggers are very, very valuable because ultimately what happens is, and I go over this, and keep in mind, this is a 15-minute chart. So when you're referencing the written guide, you're going to see screenshots of other time frames, and you're going to see how this, it doesn't matter what time frame, this strategy is pretty fruitful. But when I see a waveform like this, where I see a larger wave and then it comes down into a smaller wave, so we get this sense of slight volatility, right? And we get this curve in the price action. When I see the larger one and then it's followed up by a smaller one that's telling me that price momentum is falling to the downside. And when we see this here, we see this light blue start to vanish against the dark blue. That's saying that it's really starting to come down with some momentum. And as we curve down, we hit the zero line, boom, I'm selling. And oftentimes, like if we get this light blue that starts to disappear into the darker blue and we see a red dot, that typically is a sell trigger. That's saying sell because the momentum is going to the downside, and it does. Now, we get other waves where, here's a smaller one in front of a larger one, but that doesn't trigger for me. But like here's a small one. So we got a larger wave on the downside with price action moving up. So the bearish momentum is starting to die out into more bullish price action. So we've got the larger wave, the smaller wave, that light blue starts to disappear. Now, granted, when this is happening, so this is what's going on over here, okay? So when this is happening, boom, the price does continue to rise up into the next wave and start to form a new kind of wave trend. And that is what I look for primarily. Now, that's not to say that you can't profit from other trades, but here's another example of this. Bigger wave, smaller wave, boom, up we go. And it works both ways. Sometimes we'll get a wave, not much, and it comes back down, another wave, okay. But typically, I'm always looking for two waves that are creating a pattern for momentum to the opposite direction, and that's what I'm trading on. And I'm telling you, it works for me. And so that right there are two of the main, a few of the main things that I'm looking for. Then when I'm trading, I'm looking at RSI as well, because I want to get an understanding as to, are we in overbought or oversold territory during these trades? If we're in overbought, well, then the opposite kind of price action may start to play through. If we're in oversold, vice versa. So those are the key metrics. Now, I'm also noticing a lot more often than not that when these green trigger dots start popping up, that's a pretty good indication that the price is likely going to start moving in the opposite direction and going well. We also get these, if we see a cluster, if we see multiple yellow X's, that's a pretty good sign that we're going to dump pretty hard. That something big is going to happen. Sometimes that can mean that the price is going to go up, but more often than not, it means that there's going to be a heavy dump, a heavy and consistent dump. But when that does happen, that's basically saying that the manipulation is such that once we've reached the bottom of that, the buy pressure is likely going to bring that price action back up much quicker than it normally would in a standard market trend. Okay, hopefully that makes sense to you as well. These lines here are obviously support and resistance lines that are established throughout the real-time price action of the chart, which are very, very helpful because they matter and they mean a lot. These blue triangles are basically, it's basically saying, look, there's likely going to be a reverse in the price action or a reverse in that trend. And so forth and so on. Those are the primary things that I'm looking for. And I want to keep this kind of simple. I'm going to be doing follow-up videos over time showing different things, but I wanted to show enough to get people started. Okay, guys, so now we're going to actually take a look at the ByBit platform. And, some of you guys are going to be like, ByBit, what are you doing? Look, I've talked to a lot of different people about different platforms. I'm aware of what's going on with some of the other platforms that are being accused of doing a lot of shady things and things like that. Not all platforms are the same. I'm not saying that I can attest to ByBit being the most honest, most amazing platform in the market. I don't know. I don't work there. I don't know. What I do know is that trading at leverage overall is extremely risky any way you look at it. And it's just kind of one of those things that, if you're willing to take some risk, great. If you're not, don't do this. It's really that simple. And I don't like when people are out there basically saying just a lot of dumb things. Like, look, I'm trying to educate people in the right ways, in my opinion, to do things, especially in my article. But I can't stop people from making stupid decisions. I mean, nobody on YouTube can. I tell a story in the written article about when I was in high school. There was a kid that I went to high school with, a super cool guy, but he was insane. He was absolutely crazy. He once shot himself through the shoulder blade with a .22 rifle because he wanted to see what it felt like to get shot. Now, is it the rifle's fault for existing, or is it his fault for being an idiot? And that's kind of the way I look at this. I'm very well aware of the risks associated with leverage trading. So if something happens and I lose money, I'm not going to go out and blame every YouTuber on the internet who talked about it. I'm not going to go out and blame the world because I made a mistake. It's my responsibility. Plain and simple. It's my responsibility as a trader. I am not endorsing high leverage trading whatsoever. And I never will. I think only an idiot will use high leverage trading to try and get ahead in the game. It's just not safe, and you're much more likely to lose everything than you are trying to be responsible, establishing a trading strategy, working that strategy, and not faltering. Okay, not getting greedy, not trying to increase leverage to get back losses from one bad trade and creating this spiraling effect that ultimately causes you to get wrecked. That's not what I'm here for. My goal is to try and teach people what I do in hopes that the way I do things helps people get a more legitimate head start in the proper ways of conducting themselves on a leverage trading platform. That's it. If you do something really, really stupid, I'm sorry, that's on you, okay? Always be safe. Use stop losses, do what you can to prevent something bad from happening. But in trading, it's all a risk. And it doesn't matter if you're spot trading or leverage trading, it's risky, okay? So I just want to make sure that's clear. So as we move forward, over here, obviously, you've got the price chart. You can adjust this price chart from a 1 to 30 minute. You can choose hourly, daily, weekly, or even a month. So those settings are up here. You can't do as much on these charts as you can the trading view, which is why this is pretty bare. I always typically keep this on a 15-minute chart though, because that's the primary chart that I'm using for my scalp trades. So if I'm doing some charting on the 15-minute chart using Market Cipher and I'm getting an idea as to what's going on, while I'm here watching price action, I'm referencing the 15-minute chart to see what's going on. Now, these two prices here are extremely important because I see people sometimes saying, oh, I was on a leverage trading platform and I set my market order and or my stop loss and the price just dropped right through it, didn't even activate it. Some of that is based on the liquidity of the asset you're trading. Some of it is in a leverage platform. You'll notice this over here is the last traded price, which is currently $89.48. On the same thing, this is your mark price. This is $89.53. The mark price is what your stop losses and such are activated or triggered with. Okay, there's a difference because one price is the last traded price. The mark price is typically, as I understand it, it's a culmination of like the 5 top exchanges on the market, including, I think, CoinBase Pro, Kraken, and some others. Okay. So it's kind of like an aggregated price that's an average of all the other top exchanges on the market. And so that is the price that is going to trigger. So if I'm trying to set a stop loss at $89.48, and it doesn't trigger until 89.54 and the price goes up and comes back down, well, then some people looking at this are going to be like, well, my stop loss didn't even trigger. This is crazy. That's because it's not the one that's triggered on. So you want to make sure that you understand the difference between the two. There's last price action, or the last market price, and then your mark price. Okay. Over here on the right, we see limit, market, and conditional. So if I want to, let's say I want to go and I want to buy long. Okay. The price is currently at 89.55 and I want to go long. I would set my leverage, but let's say I want to reduce my fees. If I'm very positive that the price is going to maybe drop a bit before it goes up, then I can set a limit order here and when the price, and let the price come to me. At which point, when that happens, then my price is then activated and my trade is executed, and I'm now long at that price. But if I'm looking at the price, it's 89.51. I think it's going to go up further from here. I don't really want to wait for it to drop a bit. That's when I'm using the market order. Okay. So if I'm setting a market order like right now, and I'm not even charting this. This isn't a real trade, but if I were, let's say I wanted to go long because I'm looking at the price and I'm chasing candles, right? Which you never do. I'm making a joke, folks. But I used to chase candles when I first got into spot trading, and it's so funny now when I think about it. So anyway, and I want to go long. Basically, my leverage is set at 5x, okay? This number here is the total amount of my trade. So, let's say I only want to risk, let's say I want to risk $20, okay? But I'm trading at 5x. That means that the total quantity of the trade is $100, okay? Because that's 5x times the $20 capital that I'm actually putting at risk to trade $100 worth of USD, okay, as Bitcoin. So, and I break this down in detail in the written article with a lot of other notes and things. But ultimately, this is what you're wanting to use. You do not want to use these. You do not want to get in the habit of using these. If you click 100%, that's going to basically say that you want to do a 5x trade using 100% of the capital you have available. You don't want to do that. I have roughly $1,000. I have a little more than that, I think. But I have roughly $1,000 that I've been experimenting with, doing different things with. And I won't risk all of it in one thing. I typically, when I'm doing these trades, I'm going to do a $100 trade at 5x. I'm going to risk $20, or I might do $500 total. Okay. Which means I'm doing a $100 trade. I'm risking $100 to make a trade. Now, from there, if I'm going to go long, I'm basically going to buy it long, and I'm not going to execute the trade, but I'm going to show you what happens. This pops up. So when this window pops up, I can set a take profit, but I'm not going to do that because I'm watching all my trades in real time. Okay. So if it's going up, I'm just going to watch it go up. I'll get out when I see a reversal. I can set a stop loss at whatever price I want. So if I'm executing this trade, the mark price on this is 89.55. So if I'm going long on this trade, I can set a stop loss at 89.50. So if it drops $5, I'm going to take a bit of a loss but on a short time frame, these kinds of things happen. And often it doesn't really matter what time frame you're trading on. You can go long on something, you can go short on something. That price can reverse in seconds. So you never know 100%. So maybe you're thinking the price is going to come down, but I'm willing to let it go up a little bit, or basically I'm willing to let it go in the opposite of my trade, right? My trade expectation, and give it some wiggle room before I exit out of the trade altogether, thinking, okay, this is a bad trade. But this is where you set your stop loss. So let's say, I'm going long on this trade, and my estimated liquidation price, which means when the price on this trade, if the price gets to $7,489 on this mark price, I lose the $100 I just invested. Okay, so that's that. Now, if I set my trade or my stop loss, it's at 89.55. I'm going long. I'll set it at 89.45. Okay, oops, 89.45. That gives me some wiggle room. So if the price drops a little bit before it starts to shoot up, that's fine. I'm not going to exit out of my trade and take that loss. But the risk is I might take a little bit of a loss. Now, what I typically do is I'll enter a trade and I don't set a stop loss immediately, because what happens is when I go long or short, whatever the case may be, the trade will all happen right here. And in that instance, I will see a market buy or sell order right here. So when I want, I can just click market and then confirm, and I'm out of the trade completely in a split second. So when I'm watching this price activity on a 15-minute chart, or once I've executed a trade, I might even go to a 5-minute chart just because I like to watch grass grow. But so you can see here on a 5-minute chart, had I gone long, I'd be watching this price kind of go down a little bit. So I'd have been long, I'm watching the price and I'm getting an idea. And then I might go to a 1 minute because I'll get super OCD or whatever about it. And I'm like, oh, watching this. Oh, it's going down. Oh, it's green. And that's what I do. I'll watch it just flicker back and forth between colors just to drive myself nuts. I'm like half joking, but it is true. This is what I do. And it's actually fun for me. But I'm watching this price activity and I'm thinking to myself, okay, where are we going? And I'm going to watch it. And if the price starts to reverse, I might just get out of the trade. And, I might lose 50 cents or something. Big whoop, right? But when I make a trade and I start to see it go long, or rise up. So let's say I went long at 89.55 and then the price gets up to 89.60 or whatever. Well, depending, I might just take profit and be like, good, or I set a stop loss. Now, if I've already made the trade and it's already sitting down here, then I'll go to the conditional tab. Okay. Once I go to this conditional tab, it defaults to limit. I don't want that. I want to market. Okay. And my trigger price on that, let's say I went in at 89.55. The price is like 89.60. Well, now I want to set my stop loss into a position where no matter what, if that stop loss is triggered, I'm exiting that trade at profit. So if I went in at 89.55 and the price has gone up to 89.65, I might set it at 89.60. And that's that. And I want so if it was a $500 total trade where it was at 5x leverage, that's $100 risked. So it's a $500 trade. And if I went long on the original trade, my stop loss is going to be a sell short. And that's going to liquidate my position, not liquidate. It's going to exit my position at profit. Okay. And that's it. And then the reverse is also true. If I'm going short on something, then my stop loss is going to be buy long, because it's your stop loss is going to be the opposite of your initial trade activity. Okay. And that's really all there is to it. I mean, as far as like basic trading, basic fundamentals of the platform and what it does, there is mutual insurance. So if somebody's trading with a larger sum and they want to get trade insurance on that, I've got a link to ByBit's explanation of what mutual insurance is when you're talking about insurance for leveraged trades. I really think overall that if you're watching this video and you're getting kind of a fundamental understanding as to at least what I do, and then you read the article, the tutorial article, it took me days, okay? It took me days, and it's a living article. As I continue to learn and as I continue to understand new things and try new strategies, I'm going to be adding them to that article. Bookmark that article and use it as a reference, because as I continue to trade and I continue to learn, I'm going to be sharing those lessons in this long form, living, breathing article, this tutorial, to try and help everybody basically start where I'm at and learn with me. And, again, in the article, I basically say, look, I am scalp trading on 1 to 15 minute charts. I'm using all other larger time frames to get a picture of the market and an understanding as to the sentiment at that current time. I do not go in and make big dollar trades like, I don't trade with this. Look, I trade to learn. I trade to enjoy little profits and little wins that kind of keep me motivated and in the game while I'm continuing to learn the indicators, everything that I'm doing. This is a fun thing for me. I'm not somebody who, I'm trading like a very, very small percentage of my overall holdings. And if something happens, something happens. And that's just the way I look at it. I'm doing everything I can to trade as safely as possible. But wow, it's on a 1 minute, things are looking pretty good. So if I would have went long on that trade, I'd be up probably. I don't know, on that I might be up, $8 to $10 maybe right now. So yeah, it's a lot of fun. But it cannot be fun really quickly if I started doing really silly things. Okay. So I encourage everybody, learn your indicators, put the time in. Don't think, oh, well, I'm putting in all this work and, I'm only trading with $100 and, whatever. I want to see some big gains. So I'm going to crank the leverage and take, don't do that. Just don't do that. It's not about making that quick buck. This is about establishing a trade. This is about establishing a skill that could prove fruitful for you for a lifetime. Okay? This is about learning how to trade responsibly and not make those dumb rookie mistakes that guys that are desperate come in. Oh, I'm going to trade with high leverage. I'm going to make a fortune. And then they lose everything and then they're out of the whole game. They're done. They didn't learn anything. They didn't acquire any new skills. They didn't learn a fundamental understanding of technical analysis or indicators or anything that's going to help them establish profitability over a long period of time. Let's just say hypothetically, you made a $100 trade and you cranked up the leverage and you made some dumb trade and it actually happened to go your way somehow. What's going to happen next? You're going to do it again. And that will be the trade that you lose everything. This is not about a quick buck, people. This is not about taking crazy risks for crazy gains, no pain, no gain, and all that dumb bullshit that does not apply to trading. It just does not apply to trading. The smart money that are using leverage trading are basically doing similar things to what I'm doing, I'd have to assume, because look, how many times do we see longs getting liquidated, shorts getting liquidated? These guys are getting liquidated because they're trading on 4 hour, 1 day, weekly charts, betting on the overall sentiment long term for the asset. And they're going into these trades and they're setting it and forgetting it. And they're, sure, they're probably using stop losses and things. But when the market is as volatile as Bitcoin is, we can see a $2,000 swing in an afternoon. And those are going to liquidate longs and shorts. As you see here, you're talking about an $89.65 mark price. And the liquidation price on that trade was, I forget what it was. It was 7,000 something. We see those $2,000 swings on the regular, and a lot of those $2,000 swings are whales trying to liquidate other whales. It's a game. As retail investors, as the small time guys, we're basically feeder fish off the backs of the whales that are controlling the market. So if you're trying to go long on a position that you're going to stay in for days or weeks at a time, you're much more likely going to get liquidated. That's my personal opinion, I guess, but it's basically what I've seen time and time again. That's the way the market is right now. It is much more easily manipulated than, a lot of the Forex markets or the traditional stock markets. Not that it doesn't happen, but you really need the assets to be able to move the market in one direction or another. Well, in Bitcoin, when you've got guys that are holding 10,000 Bitcoin, Grayscale buying up what I forget how many like 500,000 Bitcoin so far. Those guys have the ability to now move the market. They can manipulate the market any way they want if they so chose. And that's the nature of this thing. By scalp trading on small time frames, making quick trades, and taking that money, I'm lowering my risk of getting liquidated by a magnitude of I don't know what. All right, ladies and gentlemen, now we're going to touch on something that I really hardly ever see any YouTubers discuss. I'm sure some of them have, but I don't think any of them have really gone into detail about this. And I think a part of it is because it's scary as hell. And, you know, the reality is that while there are going to be people out there like, oh, you're promoting ByBit because you're going to make money off of all these dumb people and all this other, that really is not what my intentions are. For those of you who have followed me for a long time, you guys kind of know how I operate. I believe in exposing people to all options, trying to educate as best I can. But I also believe in sharing the good and the bad and the ugly and whatever else in between if possible. Because while this is a very powerful tool, it can either, you can profit from it in powerful ways, or you can absolutely lose it all very easily. And this is the calculating leverage chart example that I just put together. To show you an example, a $9,000 trade. Let's say you enter a trade. Let's say these are all long trades, okay? The same is pretty much true for shorts for the most part, but let's say you're entering a long trade at $9,018 at 5x leverage. Your liquidation price is $7,546, which means if you enter a long at $9,018, if the price drops 16.32% roughly, you get liquidated. Okay? So there's a lot of wiggle room there. Okay? However, and you can see in the chart how that changes as you increase your leverage. 10x leverage, you've got just under 11% roughly of wiggle room. At 25x leverage trade, 3.41%. If the price drops just under 3.5% from where you entered your long, you are liquidated. A 50x trade, 1.53%. Keep in mind, we're talking about Bitcoin, folks. Bitcoin moves in drastic waves all the time. This is why high leverage trading is so idiotic. 100x trade. Let's just say you got some wild hair up your butt or your death wish. You want your wife to leave you. I don't know. You've got issues. You're just completely degenerate gambler. I don't know. Whatever your problem is. And you decide to enter a 100x leverage trade at a price of $9,014, the price only needs to move 0.5% and you've lost everything. Did that sink in? Absolute insanity. So I'm going to show you what this actually looks like on a chart. Let me remove this image here. Okay, so this is a chart. And I've basically demonstrated these positions. So the first position is at a 5x long. So you can see it down here, 5x long. That's 16.31%. So you have all this wiggle room. So if you enter a position up here on 5x leverage, you have basically down here until you're liquidated. So it's a pretty long way to go. A lot's going to happen in the meantime. The chances that you get liquidated at that price, especially if you're using stop losses or tiered stop losses, if you get that much in profit, a lot of people, Crypto Face, myself, the more profit you are able to get into on a trade, you want to start tiering your stop losses. Right? So you're going to enter one stop loss at higher price. You'll enter another one down here, enter another one down here, enter another one down here. That way you're not, because if the price falls more and more and more after it's risen up a bit, which is obviously the case that happens a lot with the volatility of Bitcoin, you don't want to completely exit your position if there's an opportunity for it to grow, right? So it's risk management in a nutshell through these tiered stop losses. Now, look at this tiny little sliver. Now, this is on a 30-minute chart. This tiny little red sliver up here is your 100x window. So if you enter a trade here, already been liquidated by the time that 30-minute candle has finished and moved on to the next one. That is how simple and easy it is to get liquidated at high leverage trading. I really hope this tutorial spells it out for you. Here's the thing. I just made this analogy in my influencer chat because we're having a discussion about leverage trading. And, you know, I have like 160 YouTubers and Twitter people, but mostly YouTubers in this invite-only Telegram group that I started a while back. And, you know, there are a lot of good discussions in there. And, you know, we've been talking about leverage trading. And I told, you know, one of the other influencers that came in and he apologized to a lot of the leverage trading YouTubers out there. Basically, you know, he's starting to see a lot of what I've been seeing. And he's starting to realize why a lot of this FUD was created to begin with, right? And, you know, and I told him, I said, look, you know, I'm doing a tutorial and I'm doing a video you know, supplemented by an article and all this other stuff. And I said, it's not about making a killing with affiliate marketing. I mean, if you're going to put the work in and there's an opportunity to profit from affiliate links, why not, really? But the idea is if you tell somebody, don't play with matches are bad, what happens? If everybody out there is just explaining to people, or not even explaining, just saying, don't do leverage, it's bad, it's stupid, people get wrecked, that creates an allure. It's like, you know, oh, don't play with matches because, you know, they'll burn houses down. But nobody's explaining anything. They're just saying, don't do it. And so with that gets people more curious. And that gets people saying, well, what's all the fuss about? I want to find out. And then they blindly dive in and they just make a bunch of mistakes and they don't know what they're doing. They just know that their natural instinct when somebody says, don't touch that oven. You know, how many times have you seen your kids and you're cooking and they're getting close and you're like, don't touch that oven. And then 2 seconds later, you hear them crying because they just couldn't help themselves but to touch the oven. I look at it like, look, if I say don't play with matches, you're going to play with matches anyway. Because that's just the nature of things. Anybody that's told not to do something wants to do it. I'm looking at this tutorial as a way of educating people on the good and the bad so that the allure is gone. There is no more allure. This is it in a nutshell. This is how it's done. This is how it works. This is the potential for pros and cons. And hopefully this gets a lot of the people who have been seeing about it and curious about it, you know, a lot of why is everybody saying it's so bad? Why is it so bad? I want to try it out and see for myself what the fuss is about. Well, now you don't necessarily have to, because I've explained everything, I feel, in pretty good detail. Between the video and the article, it should answer the vast majority of questions. And if it doesn't, ask them in the comments below. The idea for this is not to promote leverage trading in that sense. The idea is for everyone out there that's curious about what all the fuss is about, this is it. It's just a very dangerous but very potentially lucrative tool when utilized properly by educated and experienced traders. It is simply not something for newcomers to come in and make a quick buck. You need to educate yourself. You need to find a series of indicators that work well for you. I would encourage you to maybe practice on spot trades for that matter. But the flip side to this is, you know, I've made comments in the past about how I feel that leverage trading is actually a little safer than spot trading. And an example of that is this. Let's say I'm in a 5X trade. So I've got 16.31% area before I'm liquidated. So when I made that trade, if I make a spot trade, let's say I think the price is going lower, okay? And so I'm selling all my Bitcoin on a spot trade through a market order right here. And I'm waiting for the price to go lower so that I could buy back in and hopefully accumulate more Bitcoin, right? And that works. It happens. But the flip side to that is if I am wrong and the price changes, well, now I've already kind of screwed myself because I basically liquidated myself already. I've not liquidated, but I missed the opportunity. So now I'm buying back into Bitcoin at a higher price. So now I'm getting less than I started with. With leverage trading, I'm able to go into a trade at 5x leverage, and if the price falls down to here, there's always a chance that it's going to come back up, right? So I haven't lost anything. If the price falls but then skyrockets, well, I've been in the trade. I didn't have to time things 100% because I have some wiggle room. And there we go. And that's when I said earlier on how this is less stressful to me than spot trading. Spot trading is you're either right or you're wrong, and there really is no wiggle room. And I think this is one of the reasons why a lot of professional traders are doing this, because with a proper education and a proper skill set and experience, you can really utilize this tool to enhance your trading profits. But like I said, it's very dangerous in the wrong hands, much like anything else. Now, some people are also saying, well, Crow, if you go into a long here and you've got all this room, why don't you just go into the trade and just leave it alone? Chances are, what are the chances that it's going to fall 16.31%? They're pretty good, actually. Keep in mind, we're looking at a 30-minute chart. Now, if we expand the time frame into a 4-hour or day chart, you see wicks come all the way down. Nothing is going to change the fact that there are whales, there are market manipulators, there are all sorts of reasons why the price can hit that mark. It can come down 16.31% and liquidate my 5x trade. Anything is possible in crypto. That is why when you see people, even people who are extremely bullish in Bitcoin and they're extremely bullish on whatever they're trading, short term, they still take profit. This was something that always confused me in the past because I never quite understood, why would a trader take profit on something that they're bullish on long term? It's because they've made the trade, they've accumulated more, they likely have more Bitcoin than they started with, they're already at profit. There's no point in being greedy and waiting for some manipulation or some whale or something to happen that then liquidates that trade for them. There's no reason to. That's why you don't want to trade greedily. You want to play it smart. You want to keep a system. You want to work your system and maintain that momentum moving forward. And that's really it in a nutshell. I truly, truly, truly hope that everybody that's watched this video, if you find value in it, please like it. Leave a comment, make sure you subscribe, hit the little notification bell, and hopefully I don't get too much hate. Hopefully the message is clear in this video. But if you're a seasoned trader and you're actively looking to get into leverage trading and you're outside of the US and you're not in a country that's restricted, then by all means, use my link, sign up. And, keep tabs, bookmark my article because it is a living article. The more I learn, the more I'm going to update it. And that's about it in a nutshell. Until next time, guys, thank you so much for joining me. Be safe, trade safe, and crow your coins. And I'll see you again real soon.